Welcome to the crypto heavyweight title match, Bitcoin versus XRP. Which one is making millionaires? Which one is keeping the millionaires? And what's the better investment? That's what we're getting into in this video, how they're the same, how they're different, how they're both weaving into the existing financial system as we speak, and of course, which one is the best. First, I want to share with you my crypto portfolio. I started with a few $1,000s invested in 2017, continued buying since then, added profits from the 2021 bull run, and all that led up to this massive spike in value in 2025 because I am heavily invested in XRP. This isn't to establish credentials or to flex, it's just to show you that I'm biased, and this is definitely not financial advice because this is not responsible investing at all. So consider this financial show and tell. There's a lot of exciting stuff happening in crypto. Let's get started and meet the contenders.
In this corner, weighing in at a $2.3 trillion market cap, a 21 million max supply owned by top companies, governments, and your Uber driver, whose creator remains unknown to this day. Talk about daddy issues, Bitcoin! And in this corner, weighing at a $200 billion market cap, a 100 billion max supply, hot off a legal victory against the SEC. We get it, your daddy's a lawyer, XRP!
It'd be real cool if you tap that like button now. I am Raj. On this channel, we talk about money, and I'm sure you've heard Bitcoin is breaking into all-time highs. XRP is up almost 500% in the past year, and 3 laws are expected to get passed, making crypto about as legitimate as can be. So instead of going into the Fibonacci retracement levels, ascending and descending triangles, head and shoulders patterns, rainbow charts, bubble maps, technical analysis, also known as astrology for dudes, I'll instead go into the differences between the two and explain why they're both so important to crypto, how this affects finance and our money at large. And I promise, if you watch this video all the way through, you'll get the information you need to at least consider them as part of your investment strategy. Because let's be honest, financial advisors still aren't talking about this stuff, and it's costing us money, which means random guys on YouTube are the best we got. So how are they the same? Both XRP and Bitcoin are cryptocurrencies, otherwise known as digital currencies or digital assets. Both are high-risk speculative investments. Both are based on blockchain technology. Both have a limited supply, Bitcoin having a hard cap of 21 million BTC and XRP having a fixed supply of 100 billion XRP, and both enable peer-to-peer transfers, meaning you can send money directly from one person to another with no middleman in between. It's my money and I need it now. Call JG Wentworth 877 cash now. But they are very different in more than a few ways, and the facts can get lost in all the noise, especially right now when prices start to get really crazy. So let's start with Bitcoin, because if we understand its place and value, then we can properly assess where XRP fits into the picture. To understand why Bitcoin has incredible value all over the world, we don't actually need to go too far back in time, because in October 2021, 80% of all US dollars ever were printed in the 2 years prior. So whatever you want to call it, quantitative easing, money printing, inflation, that was happening, and I don't remember voting for that kind of cash to suddenly appear. If you go back a little further to 2008, the subprime mortgage crisis was where banks were loaning riskier and riskier loans for homes until the market eventually popped. This was the key moment in history because this led to the birth of Bitcoin. When the markets crashed, the government decided to bail out the banks responsible for lending those risky loans out in the first place. And there was naturally opposition to this because, well, what about the people who lost their homes? And again, nobody voted for that. There has been a history of the government having to choose one bad circumstance over another bad situation. Do we let the economy crash due to a sudden global health issue, or do we print our way out of it? Do we allow banks to fail and pick up the pieces, or do we bail them out and figure it out as we go from there? There's no right answer, only pros and cons. All this to say, it feels like that show Whose Line Is It Anyway, where everything is made up and the points don't matter, there's just no rules that we can all agree on when it comes to money. But enter Bitcoin. You can't just print more of it, and you can't just preferentially give it away. Which leads us to the next major concept we need to address, the role of money. Money should serve 3 purposes. 1, it's a medium of exchange. meaning you can trade it for goods or services, and you don't need to barter to make a transaction happen. You can use money as the intermediary. For example, if I need a haircut, I pay my barber, I get a haircut. If we didn't have the medium of exchange, I would have to hope that he needs an oil change and his tires rotated every few weeks, and that nobody else has already done it for him by the time I need a haircut again. Number two, a unit of account, meaning we can use it to compare pricing for goods and services. For example, this McLaren is worth about 3 to 4 Bitcoin versus this Honda Civic, which is worth way less than 1 Bitcoin. And we would have enough for a McLaren today if we bought $60 worth of Bitcoin back in 2012, but instead we spent that on Call of Duty Black Ops 2. Remember when Bitcoin was worth $12? Pepperidge Farm remembers. And 3, a store of value, meaning that it will retain its purchasing power over time. So for Bitcoin and crypto in general, the biggest criticism is number 3, store of value, because crypto has a tendency to lose a ton of its value during bear markets, but it's also gone up in value every few years, well outpacing the falls. So the only thing we can really say is that this is a volatile, risky asset and not the best as a store of value. But for now, it is doing better than the US dollar in terms of purchasing power. And here's a really depressing graph showing the decline of the purchasing power of the dollar over the past few decades. Now, the birth of an entirely new asset class that doesn't have inflationary pressure is a huge deal because, yes, the dollar has been on a decline, but it's at least fallen in purchasing power at a relatively steady rate. The system hasn't been shocked too severely until more recently, but this isn't the case globally. Somewhere around 2017, a coffee in Venezuela would have cost you 450 bolivars. Just 2 years later, that same coffee would cost over 1 million bolivars. And the inflation crisis there is still an issue today. If the decades-long trend of money printing here in the US and the extreme end of inflation in Venezuela isn't enough to see the value of Bitcoin, I don't know what else to tell you. So naturally, this would lead people down the crypto rabbit hole and eventually to altcoins or coins other than Bitcoin. But not every project survives. Fair warning. Last bull run, if you had $1 million in Terra Luna, a coin that experienced an unwinding and its own hyperinflation, that $1 million a week after the project started to unravel would be worth just enough to get a single cup of coffee from Starbucks. So it's very clear. When it comes to crypto, Bitcoin is the standard, and all other cryptos should be measured against it and have some unique proposition or advantage that allows it to compete in the marketplace. Ideally, it should be vetted by time and ability to deliver on what it is trying to do. This brings us to what feels like the hottest altcoin right now, XRP. The market has consistently valued XRP as a top project, even during an SEC lawsuit, even during a crypto bull run in 2021 where it did not break all-time highs, and XRP has in the past flipped Ethereum in terms of market cap for a brief moment in time. So it's always been here, and it's being used today for transactions, and there are a few reasons for that. XRP's key features make it additive to Bitcoin, crypto, and finance at large. Those features are XRP's high transaction speed, low cost per transaction, inroads to banking and traditional finance through the company Ripple, and as of now, regulatory certainty through the courts and more recently, crypto-specific laws. If you want to move money and settle transactions for financial institutions, the purpose of XRP, you need something fast, cheap to use, and something that is trustworthy based on relationships and has legal backing. The ruling from Judge Torres was very clear that XRP itself was not a security. Ripple has been building relationships with major players in the world of finance for years, and the 3 bills set up crypto in a clear way where financial institutions know what they're getting into from a legal perspective for crypto in general. The first of those 3 laws, the Clarity Act, clearly defines which government agency regulates specific parts of the crypto markets. The SEC, the Securities and Exchange Commission, has restricted digital asset or profit or rights-based tokens. The CFTC, the Commodities Futures Trading Commission, has digital commodities like Bitcoin, Ethereum, and since a court case ruling classified XRP as not a security, the assumption is that XRP would be regulated by the CFTC. The Genius Act provides a framework for stablecoins. These are coins that are typically worth a fixed amount, usually $1. And the Anti-CBDC Surveillance State Act prohibits the Federal Reserve from creating or issuing a U.S. central bank digital currency, and this prevents surveillance of money by the Federal Reserve, or in other words, protection of financial privacy. So when it comes to XRP, the main benefit is its ability to facilitate transactions. But there's a problem. With stablecoins coming into the picture, why wouldn't someone just use stablecoins instead of XRP? Totally valid question, so let's keep it very simple. Let's say I owe you $1. I take $1 and give it to you. We could do this exact same transaction with RLUSD, Ripple stablecoin, or any other stablecoin, assuming that we both have access and accept both currencies. And that works totally fine. But XRP is a bridge currency. It facilitates transactions between two different currencies. So if I owe you $1 and you happen to be needing a British pound because you're going to London soon, that can happen. I would send you $1. XRP would come into the mix and convert in just a few seconds that $1 to the equal amount at the time of the transaction to a British pound, and you receive British pounds. So the idea is that XRP itself can be used as a direct trade of value, like sending a Bitcoin or a US dollar, or it can be used as the in-between to facilitate a currency swap. Now, here's a really interesting point. By onboarding more use of stablecoins, specifically RLUSD from Ripple, it would be possible to expand the use case of XRP despite not being used for dollar-to-dollar transactions, more specifically stablecoin to stablecoin transactions. RLUSD is native to the XRP ledger, the blockchain of XRP, and XRP is the default currency of the XRP ledger. More use of RLUSD would, in theory, increase use of XRP as a bridge currency asset because all transactions would be on the XRP blockchain in the event of a multi-currency exchange. I know that got a little complex, so the simple explanation is Ripple is building a stablecoin that exists in the XRP ecosystem, and more use of RLUSD would increase use of XRP. And why this is a huge deal is because globally, trillions of dollars are moved every single day, some of that, of course, being from one currency to another. XRP can capture some of that volume, and the price should go up in value as the network effect starts to happen. So with that kind of potential, the math can get insane for what is possible for XRP prices. Just like a few years ago, it would have been absolutely ridiculous to say that Bitcoin would be worth over $100,000 when it was trading at a few $100s. It is absolutely ridiculous to think that XRP would be worth 10, 100, 1,000, even more, but there is potential here because trillions are moving all the time. I mean, companies and countries are holding Bitcoin now. Who's to say that won't be the case for XRP in the future too? So which one is better depends entirely on how you view inflation, money, the future of finance, and of course, your own current personal situation, risk tolerance, financial goals, all that, and what your thoughts are in general for the market cycles. The crypto markets are full of huge price swings up and down, and they can get really painful. And my personal favorite part is the grueling, boring sideways market where we all get to question every decision we've ever made and hope that buying all this magic internet money was a good idea. The best part about personal finance is that it's personal, and I would love to know what your plans are for XRP, Bitcoin, crypto, stocks too. And if you're trying to trade crypto with more success, there is data out there that can help you. And in this video, on your screen or in the description below, you'll know in about 6 minutes exactly when to buy and sell crypto. So thanks for watching. Be sure to subscribe for more content, and I'll see you in the next video. Have a good one.